Hey everyone, welcome to another video by Optionables. My name is Saket, and in today's video, as usual, we are going to look at what happened to the markets, what we can expect from the markets, and what happened to our trade. So all the videos, usually we divide it into three sections, and first we'll start off by looking at what happened to the markets. So this video will be kept short because there is nothing more to add than what we had discussed in the previous video, because the market is more or less consolidating in a very small range between 15,500 to 16,000. There is a very strong call rating happening at 16,000. There is also very strong put rating at 15,500, and the market is just swinging to and fro between this level. And the thing is, if you actually look at the markets today, market is up by around 60 points. But we saw a lot of volatility in between before the market actually ended 60 points higher. So it opened almost negative, then shot up close to 130, 140 points, and from there it further fell around 120 points, and then it again went up around 80 points. So there is a lot of volatility, and this is pretty much on the expected lines, because on one side we have FIIs who are continuously selling, and one more side we have DIIs who are continuously buying. Let's say in the morning DIIs punch in an order of 1000 crores, market shoots up around 100 points, then FIIs punch in an order of 1500 crores, market falls around 100 points. DIIs again punch in an order of around 1500 crores, it again shoots up, and then FIIs would have finally sold. So because the quantum of buying or selling is so huge, that's why we are witnessing such wild swings in the market. So if you actually look at the previous months and all, the buying was hardly around 1000 crores, 900 crores, even selling was around 1100, 1200 crores. So when such things happen, the overall market movement will be quite low. But when the buying selling happens in 3000, 4000 crores, obviously there will be very high volatility. Coming to stock specific and sector specific action. So today Eicher Motors ended up shooting around 7% because it came out with a very good result. So that was one stock specific action. And when we look at the sectors, so today tech stocks did very badly. So it was almost down around 1%. The entire index was down around 1%, whereas banking stocks did very well. So that's the reason the banking index was up around 1%. So here one side we had IT which was pulling down Nifty, and on the other side we had banking which was pulling up Nifty, and overall Nifty ended around 0.4% or 60 points higher, and Bank Nifty ended up shooting around 1%, and IT index was down almost around 1%. So overall we saw Nifty move nowhere, so it neither crossed 16,000, and at 15,800 we have discussed this multiple times that it is a very strong support zone. So even today, as soon as the market came below 15,800, we saw some very good buying and the market shot up above 15,800, and as it moved towards 16,000 there was some very huge selling there, and the market started coming towards 15,800. So overall, the broader range what we are expecting for Nifty is from 15,500 to 16,000 for this particular week, but we are still bearish until and unless market ends up closing above 16,000. So once it closes above 16,000, we'll slowly start cutting down our short position. And after this, when we move on to what we can expect from Bank Nifty, again here the trend seems to be quite bearish, and on the upside we face a very strong resistance at 34,500, whereas on the lower side we are finding some support at 33,000, because multiple times when the market came towards 33,000 we saw some very strong buying, and immediately the markets ended up shooting higher. So that's the reason the broader range for Bank Nifty would be 33,000 to 34,500. So this is the broader outlook. And coming to the trade, we didn't do anything with our trade, and we were slightly on the bearish end, and I had discussed this in the yesterday's video as well. And today the markets ended up shooting higher. We had done a 33,000 short straddle in Bank Nifty, and we also had a naked call option short in Bank Nifty. And not just that, in Nifty also we had 1000 quantity of future short and in the money option buy. So obviously if the market is shooting up, we can't end in profit, and that's the reason we had to book totally around 2.1 lakh loss today. And this is more or less notional because this was more on the expected lines. So the moment market closes above 16,000, we might end up losing somewhere around 4 to 5 lakhs. So this is on the expected lines, and we are ready to take the risk. So once it is closing above 16,000, we'll be booking a loss, but as it falls towards 15,500, we'll further end up making around 5 to 6 lakh. So it's like more or less 1:1 risk to reward. If it goes towards 16,000, we will totally lose around 5 lakh. If it falls towards 15,500, we will make around 6 to 7 lakh. So the risk to reward is 1:1. Probability we don't know, so we have taken this trade because we believe right now the market is bearish and there are higher chances we will move towards 15,600 or 500 than moving and closing above 16,000. So can we be wrong? Yes, definitely, and we can totally be wrong. But one thing what you should note here is that even if we are wrong, the total loss is well within the risk limit. So here we are not trying to risk more than 1% of our capital, which is close to 5 lakh. So even if we are closing well above 16,000, our loss will be in and around 5 lakh, which is 1% of the capital. One thing what we should note is making profit is not important. So making sure that you don't lose a lot of money is very important, because if you start losing a lot of money initially, so later you won't have the capital to come back up. So if you lose 50% of your capital, so then you will have to double your money or generate a return of close to 100% to just get back your initial capital, and this is obviously not going to be easy in the longer run. So it is always about capital preservation rather than trying to generate more returns. So this is the gist of today, and as I told you, there was no much trade which we did, and market outlook, still we are bearish on the market, and the thing is we are expecting some kind of support to come in at 15,500 and 16,000 to act as a very strong resistance. And apart from that, if you actually look at it, what happens to US market today holds a very strong key to what can happen to our market tomorrow. The reason for this is pretty simple, because US markets are seeing a very strong bounce from the bottom. If this positive momentum sustains, then we can easily expect the market to inch towards 16,000. If US market shows any kind of weakness today and starts falling further, then we might see a break and close below 15,800. What is going to happen is something which the time should tell, and all we can do is wait and see what exactly can happen. So with this, we also come to the end of this video. I hope that you guys have liked this video, and again, there is nothing much to tell apart from the fact that what we had already told in the previous video, because the market has moved nowhere since then. So the market is right where it is, and hence we still stick on to the same view what we had in the last video. And also, meanwhile, if you have liked this content, do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining.